Hey everybody, Boris is making Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, August 19th to August 23rd, 2019. And the story in the dol land has been a mild recovery throughout the week, or at least some kind of a basing formation. This has been really almost a 2-week structure because we started late last week, and this week we kind of held bid across most of them. And certainly the big news when we had the change of tariffs news was the primary catalyst that really drove all the dollar trades up as the markets felt a slight tinge of relief on the fact that we're not going to have tariffs in September between U.S. and China, or additional tariffs in September between U.S. and China. Still, the levels really pretty much didn't change much. The Aussie still remains a 67, 69 trade. The caddy was interesting is that it really, that 33.50 level really operated as a pretty serious short level, and that held. But support now still remains around this 31.50 level on a broad basis. And Kiwi still holding that near-term support of 63.50 is probably the weakest of all in many ways, and still remains the most vulnerable because of the cut in rates. We did have one other positive piece of news this week, which was the Australian labor data. That proved to be much better than expected, and therefore I think pretty much reset expectations for RBA to be 25 basis point cut at most in September, and therefore provided a mild bid in the Aussie. But everything's still very much up in arms. If we re-aggravate the China story to a large extent, all of these levels could go. But for now, it's kind of a tense truce, and you see that very much in price levels as the currency's held. Again, calendar is very, very quiet. We have PPI data. We're bearish the PPI data in New Zealand, given the fact that we have a drop in PMI, and it's very likely going to come in negative, but not have much of an impact because we already had a massive rate cut. So I don't think that is going to have an impact going forward. RBA minutes here very likely could confirm this whole notion that at best the RBA is going to go 25 basis points to a cut. They clearly see the slowdown, but are not going to get hyper aggressive like RBNZ did in their response. And then Canada, we have retail sales. Here we're bearish Canada actually because we had a major deterioration in jobs and spending, although Canada has been very much up and down as far as structure goes. But for now, we're essentially assuming a mildly bearish posture for the Friday. That's really going to be the big event of the week, as a matter of fact, on the dollar land as we trade. So you can see how quiet the calendar is. It's really the doldrums of summer for the commodity land as well. And it's really going to be a risk-on, risk-off trade for those trades. Let's take a look at the charts in more detail. So here's Aussie. And it's really, as I said, it's been a 2-week build here after this spike low. It's been a two-week build in risk, although hardly a vote of uber confidence. It's basically, as exactly I described it, a tense tug of war between bulls and bears around this 67 support level. The 20-period SMA is operating as a lower bound at around 68.50 probably. So it's going to be harder and harder for it to kind of cross the 69s if it does build. And really, what can possibly push this higher at this point? Of course, anything can, but on a more realistic basis, it's really going to be a positive risk headline number. And barring China making some very, very warm noises, it's hard to imagine there's going to be a lot of upside here on the Australian move as we go forward. The only other thing I can think of is for some reason, a major dollar sell-off, just a pure dollar sell-off across the board, could certainly help push Aussie higher. But as you can see, it's barring significant news flow this week, it just simply looks to be like a 68.50, 67 trade, as everybody's happy and content to just hold ground for the time being. Kiwi, on the other hand, continues to operate lower. Here, let me just remove this. Continues to operate lower. And one of the things that is important to remember is when you have RBNZ candles, this is an RBNZ candle, and this is an RBNZ candle as well. It takes a good 2.5 weeks for the market, sometimes maybe even 3.5 weeks, for the market to really consolidate and assume the initial posture that the candle sends. So at this point, clearly the posture was negative. The only thing I will say is that the spike lows here did bounce back, and it may be more likely that we just drift to the lows, but not necessarily break them hard. But still, there's definitely scope here for Kiwi to drift lower, especially, and this is the critical thing, I think Kiwi and Aussie and everybody very vulnerable to a renewed sense of tension. If there is one unexpected headline risk, of course, is China's interference in Hong Kong. So that's unlikely, but it's the most immediate catalyst threat. Something like that certainly could drive us down to down lower. So for now, if you're buying, you're literally punting. You're buying a falling knife. Nothing technical here tells you that there is even a real bottoming. It's just simply a stalemate, a tug of war. And you do have a very clear, definitive risk. That's the only great thing about buying here is not that there's any confirmation, but that you have a very clear, definitive risk against which you can trade. So worth a punt is pretty much how you can look at all this stuff. Here's the Caddy. Let me just remove this. I'm sorry. And Caddy, what's interesting about Caddy is we talked about this 3350 as a key reversal point. So we came back down, we had the move back up, and it kind of reversed again. That's bullish. I mean, that's kind of bullish Caddy. I'm generally bullish Caddy here for the time being. It's of all the G11 economies. Ironically enough, by the way, UK is probably the strongest economy at this point for all sorts of unfathomable reasons. But Canada is a very, very strong economy in the G11 world. And more importantly, the Canadian monetary policy is really neutral to hawkish rather than neutral to dovish, which really provides a modicum of support here for the loonie. Oil holding at 55 also kind of helping. But the fact that we rejected the 3350, that's a big sign. We certainly have scope here to go down. If we have just mild risk on flows, I think Canada still provides a very interesting trade. Dollar Canada provides a very interesting trade to the downside, perhaps to the 3200 as a test. We came out close on Friday, very bullish loonie. Closing on the lows, that's a nice momentum trade. There's certainly scope here for maybe another 50, 60 pips to test the 3200s before we go back up if there is a reversal of flows. That's pretty much it on the calm down land. As I said, a stalemate in the tug of war between risk on, risk off. If we just have a sigh of relief, we should have a little bit more continuation in all the calm dollars, with dollar CAD pretty much leading the way as the strongest. Wish you guys the best luck, the best trading. Boris, over and out.